All right. Cool. Hey, Melanie.
Got it. Okay.
Hey, hey.
How are you?
Awesome.
Good.
Hi, Melanie. How are you?
Good. Hi, Todd. Nice to meet you.
Yes. Are
Going
you a
on,
mortgage
Dashay?
broker, realtor
She's a
Realtor.
She's
Okay.
a realtor.
Rockstar
Porch-
realtor.
with
Rockstar
Porchlight?
realtor for sure.
Yes. Can you tell?
Yeah.
We hey Robin, how are you?
Hi, Chad. Good afternoon.
Good afternoon. Sean, what's cracking?
Not much. How are you doing?
Good. So we are recording. All right. So I'm about to get started. Some of this will get posted. We'll try and make this as interactive as possible, but we do have a lot to go through. So today I really want to talk about three things, and some of this can be a mastermind. So Carrie, I get talking fast. I get very focused on my presentation, but Carrie will mute everyone and she can interrupt me with comments or questions, right? So some of this might be you guys talking a little bit about what deals you're seeing going on right now. And why I thought this was such a timely time. Todd and I do this once a year. I'll introduce him in a second. But why I thought this was such a timely time to go over this is I'm seeing the most challenged deals credit score wise that I've seen since probably 2012 to 2014 when we were coming out of the financial crisis. So a lot of the deals I see going on right now are down payment assistance, FHA, lower credit score people. I think it's a great time for those people to buy because any of us that have been in this market the last 3 years know that most of those buyers didn't stand a chance against the competition that was out there. So that's a drum that I just continue to beat with the 118 pre-approved buyers we have to keep them motivated, talk about all the advantages on their side of the transaction right now versus the sellers. And really the only thing working against them is interest rates, which is temporary. So if you've been watching any of my videos or we've been communicating, you know, I've been really beating the drum of all the pros stacked up on the buyer side right now versus the seller side. And I think this is a great time for credit challenge people to be out there looking and being aggressive. I think anyone that needs a down payment assistant, I didn't even bother doing them for really the last 3 years because every time we put in an offer with someone with down payment assistance, they just didn't stand a shot, right? So maybe that was short-sighted by us, but we had the deals going under contract that we had to focus on and support. So what I feel is good to educate ourselves on is the parameters of credit scoring, okay? And I am by no means an expert in this. I am very knowledgeable of what credit scoring. I know exactly what goes into it. And these are some of the reasons why you should listen to this presentation, why I'm an expert. I've been a top 1% mortgage originator since 2013. I've had that designation. I've been the top 200 of mortgage originators in the entire country since 2014, both in the Scotsman's Guide and Mortgage Originators Magazine. My coaching program, I'm one of the top 25 mortgage lenders in production, which I'm super proud of. But I do also have a background in finance. I graduated with a finance degree. I know the markets very well. I have several degrees in finance. And really, I've just had success. And why I talk about this is not to brag or not to impress you, but I see so many people out there pumping out information that I've been colleagues with, I've coached. Some people have done their mortgage and I look at their finances, I'm like, they are not experts in this area. So I always think it's wise to really, you know, look to see what the person's success is in the industry. Like Ed Mylett is someone I look up to a lot and I follow. Ed Mylett's businesses are worth over $100 million. He has $20 million in the bank. He's a motivational speaker. He's written a few books. He's an expert. He's someone I'm going to take my time to listen to. I've been $1 million earner 7 years in a row. I have $7 million in real estate holdings. I have $5 million in the stock market. So that's why to listen to me in my coaching, my expertise in mortgage lending, I have the stats to back it up. And once again, I don't say that to brag or to try and impress you. I say it to impress upon you that I speak nationally. I'm an expert in these areas. So when I'm not an expert in these areas, like I'm not with credit scoring, I don't talk about them too much. I find experts that I know have a lot of success, that I know have experience, that I know are financially very successful. Todd has been that person for me for about probably 7 years. I muddled around with probably 15 different credit scoring experts, credit repair specialists, people that talk the talk, that put out all this information, and I never got results from them. It was all hot air. I know Todd runs several successful businesses. One of them is Nationwide Credit. He has personally made me at least $200,000 in the clients that he has turned around, taken their bad credit, turned into a situation I could work with and create a deal for me and my realtor partners. He's been the only credit repair specialist that I've worked with over the last 20 years that actually walks the walk with the talk that he puts out there. So Todd has been very instrumental in some of our success. He's been very helpful with many of my clients, and he's helped realtors make commissions they would not have made if I wouldn't have introduced the client to Todd upon my initial review. So Todd and I do this once a year. Know that anytime you send a client to me, I will educate them on their credit, but if they need repair, they're going over to Todd and to Nationwide, and they are worth every penny that the client puts into their credit repair. So that's why I brought Todd on today. And we're just going to kind of go over the same presentation that we do. I'm going to moderate, but most of this is going to be Todd. So I appreciate you all being on today. It's always a pleasure to pour into you, provide you some education with some experts that have impacted my business at a high level. So Todd, anything you want to say about yourself before you get started?
Thank you so much for having me on today. I really appreciate it. So we've actually been doing this for now because we have an updated, you have an updated thing, but 30 plus years. We are the largest credit repair company in Chicago, one of the largest in the country. And I've been told that by TransUnion, that when I used to have attorneys that worked for us. And at the time when they told me this 10 plus years ago, I was the third largest law firm in the country doing credit repair. So TransUnion has been to my office. Equifax has been to my office. We're licensed, we're bonded. Our contracts are in compliance with the state and federal laws. This is a month-to-month program. There's no upfront fees. And we're very truthful with our clients. We don't make them crazy lies, which other companies will. And if somebody is not the right candidate for our service, we will tell them ahead of time. So so your questions here, let's see, question, why is my score different than on my Credit Karma?
Yeah, so like a lot of, I know realtors probably face this. I know we definitely face it. We pull credit. They're like, no, that's not my credit score. Credit Karma says this. Tell them why Credit Karma is flawed, why they don't follow our scoring, and what we can do about it.
We get that all the time. Credit Karma said I'm a 680, and then Chad pulls it in these 620. Different scoring models. There's so many different scoring models out there that they use a different one. And I always tell people, Credit Karma score is going to be higher. I'll pull my Credit Karma, then I'll go on my Bank of America and I look at that. And then I'll go on Experian and look at that. And they're all different. So the only good thing I say about that I tell people about like Credit Karma is if when we start out and you're at a 580 and now your Credit Karma has gone up to 680, 690, then the report that Chad pulled is going to go up as well. But definitely the reports are all on Credit Karma are always super high, the scores on that.
So what I'm hearing, Todd, is use this as a barometer, but not the standard.
Exactly. That's exactly what it's for. And the problem too with Credit Karma is they're only giving you TransUnion and Equifax. So you're missing your Experian report there.
Oh, very good. I did not know that.
Yep.
Cool. So where do we point our clients to get a real credit score before I pull their credit score? Where would you recommend they look?
myfico.com, and that's going to be the FICO score. So that's an excellent source to get it. Now, the problem is you got to pay for it. So if the client is willing to pay for it, that's fine. But again, if somebody pulls a Credit Karma and they tell me that the score is 540, then there's no reason that they need to go on to myfico.com and waste their money, because it's going to be even worse on that. So I always start out with the free ones, and most people who do have credit cards, all the banks seem to give them as well. Bank of America does, and Chase. So that's a good place to start for free and kind of just see where your score is at before Chad pulls. If Credit Karma says you're an 820, then I don't think you have to worry. Chad's gonna be able to do that mortgage.
Right, right. So I just bought an Airbnb on a beach house, right? And I have had Credit Karma plugged in through TurboTax when I prepared my taxes. Somehow they got at my information. And I want to warn everybody on here, because I saw it firsthand through the transaction I just completed. My Credit Karma tipped that I had pulled my credit for a mortgage. And then all of a sudden I had a ton of mortgage companies reaching out to me over email and the phone. So the reason Credit Karma will do this for free is they sell the information.
Exactly.
Now, it's also dated information and it's not exact, right? So they're
Yes.
buying 3 to 4 month old information that the repositories are selling to them at a discount. And then they take and market that material. Now, the scary part for you as the realtors is I got 10 referrals to realtors in the area that I was looking to purchase. So through the inquiry was the zip code of where I was looking at a property, which was Charleston, South Carolina, and 10 realtors were sent for me to work with. So they're not only selling what are called trigger leads to mortgage companies, they are now selling online leads to realtors. And if you point your client here too much, you could put yourself at jeopardy of being undercut on your commission. So be very, very careful with this. Cool. So we always want to protect our clients. Number 2, one of the biggest questions I get is, will your credit pull my scores down? And people are very guarded. Know that at my initial meeting with the client, we do what's called a soft pull. We check the soft pull that does not impact their credit. If the soft pull is very high, anything above a 720, we save the tri-merge pull. One, because it costs us a lot of money to do a tri-merge. And just so to give you some perspective, our typical tri-merge credit report costs us $89 to pull a client's credit. So do we really think Credit Karma is going to be accurate and do it for free without having some money behind the scenes they're making? No, they're not, because we get charged $89 per tri-merge credit bureau. So we pull a soft pull. But Todd, talk about if we do a hard inquiry, will that pull the client's scores down, about how much, and any other advice you want to give people today?
Yes, it will pull it down. Couple points, nothing terrible, 2-3 points, but depending on the situation, if the client is, tight on his points, don't go all over town having your credit pulled. Don't go to Chad and then go to another mortgage broker or go to a car dealership or apply for a credit card, because each of those will pull the score down a little bit, and it puts too many inquiries on there. So again, the soft pull, which he's talking about, no inquiry, no reduction on the score. So I am tied in directly with TransUnion. So the nice thing is, first thing we do as well, we do the soft pull, and it doesn't hurt their score and does not put an inquiry on the report. So that's the best place to start.
Awesome. So TransUnion, soft pull, no inquiry, no hit to their credit. I always tell me if this is accurate. Once again, you're the expert, not me. That a hard credit pull will impact their scores anywhere between 3 and 5 points.
That is correct. And now that with you, Chad, and it's different for each company that I don't know who you pull through, but I think if you pull like today, and you pull 4 days from now, that's only going to count as one inquiry.
That's right.
So, yeah, but I'm not sure if now if they go to another mortgage company, if they pull it, is that going to go under the same category? I'm not 100% sure because I don't see because all my pulls are soft as well. So
Yeah.
I don't see the reduction on the score right away until like you show me a report.
The most recent that this was from Equifax in a training we did is anytime if the mortgage lender is registered as a financial institution with the credit repositories, anytime other registered financial institutions pull their credit that are deemed mortgage lender, they have 60 days without it adversely impacting their scores.
Right.
So
Yeah.
really, I tell clients, hey, you have 60 days to shop for your mortgage. And after that, I wouldn't advise you pulling your credit unless you got a lot of it. How long, Todd, does it typically take for that 2 or 3 points to come back?
So inquiries fall off in 2 years, but that's not going to pull you down for 2 years. I would say a couple months, worst case scenario.
Okay, awesome. What is a FICO score and who determines it? And what is the scoring scale?
Okay, so what is a FICO score? It is a company that has developed a scoring system. Now, there's all different types of credit scores, as you know. There's insurance scores, there's auto scores, because that happens too. People will be like, oh, I went to the car dealership, I'm in, 820. And then when Chad would pull it, they're 740, and they don't understand. Different scoring model again. And the range is, well, it says 300. I've never seen anybody in the 300s. I've seen 400s and as high as 850. So that would be correct. The credit scores provided to lenders by the three major, yes. And that is correct. People say, well, how come my score is different? Experian, Equifax, and TransUnion are always, I've never seen one that they're all 760, 767, because different scoring models they use, different brands. So that's why it's going to be a little bit different. But again, as you know, Chad, we take the 3 scores, well, you take the 3 scores, throw out the high, throw out the low, and it's the middle score that you're concerned about.
That's right. So we use the middle of the 3 repository scores, right? So no, sometimes you'll see a very high Equifax and a low TransUnion and big swings in people's credit scores. And a lot of the times, Todd, I see that because there's a collection reporting to one of the repositories or a late payment or a judgment against the client, some very adverse credit scenario that hits the client, and it wasn't reported to one of the repositories. That's why we typically see those big swings. How do you see them?
That is correct. And there's no law saying that ABC Collection Company has to report to all 3 bureaus. Actually, I know a company, I met him through my Chamber of Commerce. He's in Northbrook, Illinois. He's a collection agency. And he told me he only reports to 2 of the bureaus because it's not easy, it's difficult, and he's a small company. So he doesn't want to deal with whatever the 3rd company was or is. So again, I've seen that a lot, and a lot of times too in areas. Well, we used to get People's Gas, our gas company in Chicago, used to report on only TransUnion. They quit reporting unless it goes to collection. But they at the time would only report to TransUnion. So the bureaus, like Midwest is a big TransUnion town. Equifax down south. Experian is a little bit all over as well. So it's just basically like a car dealer in Chicago, they mainly use TransUnion just because TransUnion has the market. You go down to Florida, they're all pulling Equifaxes. So there's no, one that's better, which is the most important one. They're all important, especially in mortgages. So you want to make sure that all 3 of them have good high scores on them.
That's right. And that's why all 3 are always required on a mortgage application to pull, because there are some repositories that report different and they all use different algorithms, and everything's a little different in that algorithm of their inputs. So they weight different scoring events differently. Now, this is typically how I see FICO scores consisting and the weight or the percentages of it. Todd, I put this together. Feel free to disagree with it. Feel free to elaborate on it. And I'll just kind of let you digest this, but this is where we see FICO scoring scales and how the data weights the credit score. So just feel free to comment on this graph.
Yeah, this is 100% correct. I always tell people, amounts owed. So you want to be with your credit limit. Your credit limit's $10,000. Anytime you go above $3,000, 30% of your credit limit, your score will lower. Payment history.
Oh, that's awesome input. Say that again.
So if your credit limit is $10,000, anytime you go over $3,000, 30% of the credit limit, the scores will go down. So that's first thing I look at. And we'll look at people's credit that they got perfect credit, but they got a low score. I go over it with them and well, here's your problem. You're at 97% on this one. You're over the limit on this one. You've got to get your balances down. So that's
people will say to me, Todd, well, I pay that off every month. It doesn't matter. That's your credit usage. You had $10,000 extended to you. You're using all $10,000. You're using all of the amount extended to you. What gets reported is the balances that you charge. Am I off base in saying that?
That's correct. And unfortunately, we see this a lot with people that use their cards for business, and the company, say they work for a big company, the company pays it off each month, but they run this card up so much and they max it out. And in the situations like this, I basically tell them, you've got to use a different card or something that, or your wife's card while you're going through this mortgage process, because it's going to keep you, $10,000 limit, and he hits $10,000 every month in business expenses. It gets paid in full, but it's always going to show that $10,000 balance, even though he's paying it. In situations like that too, if somebody has good credit, call up Citibank, try to get your credit line increased. If they have good credit, usually they can get it bumped up.
That's awesome feedback. So a great thing, realtors, he just said there for you, as you first engage a client, talk to them about these things. I find this is just through years of viewing credit reports, and I'll let Todd elaborate on this. The optimum number is about 2 to 3 open accounts where they're charging less than 30%, like Todd said, of their credit limit that is extended. And most people candidly don't know how much credit they've had extended to them. So they just charge and pay it off and think everything's okay. And then they come to pull a credit and they get upset with me and say, your scores are off, there's no way, or your inquiry hit my credit scores 80 points. I'm like, well, that's impossible. So that didn't happen, right? So it's super important to not just have one credit card that you use almost the whole amount of. They should have 2 or 3 if they're spending most of their credit limit.
Yeah, 100%. And we've talked about this too, Chad, and I've talked about it on my TV show that you were a guest on many years ago, that I hate department store credit cards because all they do is get people in trouble. I've seen nothing but problems. They have too many of them. The balances get high. They forget to pay them. So that's why I say have 2 or 3, credit cards. And if you have good credit, try to get some sort of rewards cards, cash back, miles. I prefer the cash back ones now, to be honest, because the miles are just, they take too many miles to get a plane ticket now. So it's not even worth it. So you're better off with the cash back. So that, again, a couple of those, you need a mix. If there's a car payment, a mortgage, you're going to have, keep the balances below 30%. You're going to see really good scores.
Yeah.
Length of credit.
Be a great life hack there. The number one really credit issue we see is a department store card that was used to get the initial discount on a big item. It has an annual fee. They don't even open the mail because they bought a Best Buy card and they bought a new plasma TV 5 years ago. It has an annual fee. It never gets paid. They take their eye off the ball, and then we pull their credit, and there's a year of late payments on that annual fee, and their credit is ruined.
Yes, that's 100% true. And I did it like once. I was buying a kayak or something from Dick's. And there was a big discount with it. I opened it, paid it off right away, and then I closed the credit card because I did not want that credit card. But I was disciplined about it, and I knew that, that eventually there's going to be a fee, and we see that all the time, and they get dinged for $30 or $40, and they have a million late payments because they didn't get paid.
Right.
So that's another problem with those. I agree with you 100%. I don't like them.
To all my realtors, loan officers, on everyone that's listening, be crystal clear. These are the things our clients want to hear from us after closing. These are the way to add values to your clients to create long-term relationships and loyalty. Shooting videos that have these little tips for your clients are what people open and keep clients. I call it stickiness with your clients. These are the things you can put out. A 30-second video on it. Hey, I heard this great talk from a credit scoring expert. He gave us a life hack. If you're going to buy a store credit card to take advantage of the discount, use it, pay it off, and close it right away, because we've heard of people having annual fees. They don't open the mail. They get assessed many months of late payments on their mortgage. It was truly late per the contract, and now their credit's ruined. Those are just great tactics. How about payment history? How much weight does that have, Todd?
That has a huge amount. So we see scores drop right away when you have that late payment. And I'll be like, Scott, you were late last month. I was late. What? Because they call me and say, my Credit Karma dropped 60, 70 points. I'll pull the credit. I go, well, you were just late on your payment. They're like, oh my gosh, I did not know that. Another thing, so Melanie just sent me a text or a chat here. She was told once you get dinged on your credit, if you close out that cards, you will get, meaning that I think what she's trying to ask is that if you have open credit, say you've had a credit card since 2002 and you don't use it, I always tell people, go buy a pair of socks, stimulate it, because what'll happen is that's got the credit history, and all of a sudden, if you don't use it, they're going to close that on you, and then your score will drop. So length of credit is really important. So yes, don't just close credit cards, especially if you only have a couple, because that's going to be a problem and you're going to lose that history. So it's really important. Unless unless you're just paying some crazy fee, you got the black card for $500 a year and you're just not using it. But yes, length of credit history is super important. So I even tell people, we get clients that we've cleaned them up, but they didn't have anything good on the report. And I tell them, just because you get a secured credit card, which is what we tell people to do in this situation, because it's a catch-22. You can't get credit if you don't have credit. So a secured credit card is where they'll go to one of the big banks, except Chase. Chase doesn't offer it. They put, say, $500 in. They get a credit line of $500. Bottom line, it shows up on their credit report. And I tell those people, again, go buy one thing or two, pay it off, take that card, throw it in the drawer. It's a crutch. We need to build some good credit. But again, just because I wiped everything out and you don't have any credit, and then you open a credit card, you're not going to be a 700 right away. It
That's
takes
right.
time. You got to crawl, walk, and run. There's no shortcut or magic pill that's going to jump your score, in that situation when you don't have any credit.
So a great thing he just said there is, when you're having younger clients, and we talked at the beginning, down payment assistance really hot, first time home buyers are really hot right now, first time investors are really hot right now. If you get with them realtors and they don't have established credit, a great exercise to give them is go to their bank, get a secured credit card, open up, that starts their payment history, right?
That is correct. Yep.
Cool. I think it's great for kids in high school. I think it's great for kids in college. Keep the credit limits low. It's tied to their bank account. They can't overspend on it. It establishes credit for them.
Yeah. And you need credit in your name. I see this all the time too. Oh, I went on my wife's card, authorized user. So technically that's not supposed to help your credit score, because it might bump it, but then when it goes through underwriting, anything that's authorized gets knocked out. So it used to work, but it doesn't
work.
Right. But that's really, it's just fake credit on you. So you're boosting somebody up, but it's not his credit. So authorized users really are a waste of time.
Yeah, Todd and I used to play this game when we first met. He'd like go to their parents and ask them to put them on other authorized users, and you would get the impact of the credit score right away. So I put my
Yes.
mom's 1976 Discover card on my credit. It's how I bought my first home because I had a ton of debt that I shared with you at the beginning that I was climbing out of. It instantly bumped up my credit score 80 points. I was able to buy the home. My first home I wouldn't have been able to buy without Todd. Now the mortgage companies and the credit repositories have got wise to that game, and they no longer allow authorized users on your credit. In fact, it only hinders your qualification, and I've seen no positive impact to your credit score. So
Well, they allow it on your credit, but it will state authorized user, but it just doesn't help the credit score.
yeah, and if that person misses the payment, it can only adversely impact your credit positively,
Yeah,
right?
yep,
So
correct.
Todd kind of alluded to this, and we don't need to spend a lot of time here, but there are 9 different FICO platforms. He alluded to some of them. So when people get their credit pulled and they just bought an auto, it's going to be a different scoring scale. If they're getting furniture, which I know a lot of people are now, they have to open credit. Those are going to be different credit scores. Department stores, insurance, everyone uses different scoring scales on the FICO platform. So all credit scores aren't equal. It doesn't matter where people pull their credit. It doesn't translate over to mortgages or auto or furniture. So there's always different scoring scales. Anything to add there, Todd?
No, you're 100% correct.
Cool. So payment history, just so I know we kind of talked through this, but talk about some of the things that are and some examples on it. And I laid some out here if you want to approach these.
So, yes, again, payment history and making your payments on time are extremely, extremely important because again, you make a late payment and we see scores drop a ton. So they don't, and I advise clients as well, most credit cards, at least the ones I have that default. And I know my mother's, because I pay her Capital One, I have it set up to whatever date of the month to pay the minimum amount, the minimum balance. For some reason, if I were to miss it, or you're traveling, or God forbid you're in the hospital, you forget to pay it because you can't, as long as it's hooked up to a checking account, there's money in there, it will pull that $35 out or whatever is the minimum payment, just so you are not late. So that's real. I tell all my clients, get set up on automatic payment with your car, your mortgage, and always have, if your car is with like Honda Financial, have Honda Financial pull the money out of your Chase account versus having Chase send the money to Honda. Here's the reason why. Because let's say all of a sudden Honda says, oh, they show you have a late payment. Like, that's impossible. I'm set up with you automatically, everything. You can go back, and we have had this situation, not as bad as it used to be. We supply them with the statement from, whatever, August of 2022. Look, I had $6,000 in this account. You guys, for some reason, had a glitch or something. It did not pull, the money. You've been pulling the last 20 payments you've done, but you missed this one. Now, if you have Chase sending them the money and they don't get it, now it's your fault. Well, that's not our problem. Chase screwed up. So I always have the finance company pull the money from your checking account, the mortgages, everything. This way, it's so much easier. Who wants to sit there and write checks and send it in the mail? It's going to get lost or something. And I think most people nowadays, I pay my credit card on my phone. I just open up the app and pay it. It's just so much easier and so much more reliable.
Todd, you're giving some great life lessons here on how to set up your finances. And I just want to tell a story really quick. So what he's saying there is really 2 things. Set up an automatic payment on your credit card so it's at least covering the minimum payment. That's awesome advice. If you do miss it, you're not going to get a 30-day late on your credit scoring. That's amazing advice. Number 2, have the institutions pull from your bill paying account, your checking account. Don't have your bills paid to them. We have a story on this. One of the 2000, I think it was 2020, it might have been another year, but it was right around 2020. Summer Olympic team, we had a client that was on the women's national team that went to the Olympics. She was in training. She went from her professional to the Olympics. She had her mortgage set up on auto pay through her bank paying her mortgage. Well, in the times that she was in training and going over to wherever the Olympics was at that year, her insurance went up, and her insurance was included in her mortgage payments, and her automatic payments were not set up for that, where she would have done the opposite and had the mortgage company pull from them. Then it's on the mortgage company to get that right. And a late payment cannot be recorded on your credit. So she could not buy a home for 2 years because of that small thing. Her credit
Terrible.
dropped
Yeah.
almost 150 points. By the time she got back to notice it, it was a 120-day late payment, and the mortgage company would not change their stance on it.
That is correct. Yep.
Right? So
Yeah.
these are things that we've seen happen. Payment history, what are some public record things that go on there? These are the main things that I see people not be aware of that's on their credit.
So the credit reporting has changed. So do you want to explain about, I'm spacing out the name because I don't see it. Who's the one that reports the public records now? It's on the tri-merge. It's not on a consumer report.
It's not on your consumer report.
No, what do you,
Derek, do you know that answer? My team captain's on, who pulls our credits.
yeah, it's, oh my gosh, not fair.
For any of these items,
Yeah,
bankruptcies show up, tax liens used to. I haven't seen one in a while, so I'm not positive if those still show anymore.
No,
The civil judgment.
There's a company now that reports the what do you call it? The public records. So they used to show
well,
up,
we can pull those through Data Verify.
Yeah, Data Verify is usually where they'll come
Right,
up.
Data Verify, so we pull that through. I see. what you're saying.
bankruptcy filings do show up, tax liens don't, and the judgments don't. But if you go on, what do you call it? Oh my gosh, I can't believe I'm spacing it out right now. But that company is the one, and I've seen it on credit reports that a mortgage broker will pull.
Cool. Yeah, we see, I mean, they definitely show up on ours, at least, the bankruptcy filings. We've seen tax liens not show up. We've seen civil judgments. So what we do is try and pull, if you realtors, if you've ever had a deal fall apart during, hey, why did the lender pre-approve them, and it falls apart on the end and you don't really get a clear answer. A lot of the time stuff shows up on Data Verify that an underwriter pulls. Maybe it's a divorce, maybe it's a property that the client didn't report on the application that they own. Maybe it's one of these 3 public record items, civil judgments, tax liens, bankruptcy filings. That's why we've been on borderline deals. We've been just sending it to underwriting from the beginning, getting the pre-approval, getting these things all cleared from the beginning, so we know we have no fallout.
The company is LexisNexis. That's what I was thinking.
Yep.
There you go, that's it.
Yeah, so, can I answer it quicker? Jerry is asking, is it better to pay off all your credit cards or to leave a 30% balance? Either or, I just want you below that 30% credit limit, depending on, not a lot of times, okay, people who have their cards maxed out and everything, you're gonna tell them, okay, you owe $9,000. Well, there's a reason that they're maxed out. They don't have the money, they're tight on the money, or they're budgeted. So instead of paying, one off 100%, let's try to, we come up with a plan. If you got 3 credit cards and whatever it is, let's pay all 3 and try to get those below the 30% versus paying them all to 0 when you can take some of that money and move it over to the other card. Yes, do doctor bills and hospitals affect your credit? Yes, they do. So we have, so what nice thing too is with my program with TransUnion, there's maybe, they approached me about 12, 13 years ago when I had my attorneys working for us. And when they told me that we were the 3rd largest credit repair law firm in the country, they asked us, would you like to be tied in directly with us, hooked up to us? And we're like, absolutely. So I was the 2nd company, because my office is literally like 3 miles from TransUnion's corporate. So they wanted me to be kind of like the guinea pig, the test subject. And I would report back to them how the system is working and everything. I became very friendly with the guys, and we'd go to lunch and stuff. And one time at lunch, she said, listen, Todd, any medical collection you have, $500, paid or unpaid, we will delete for you. So I always tell my mortgage brokers, if you see medicals on TransUnion, and that's the one that you need bumped, and you're 500 or less, literally, I've had remove one item. We've seen scores go up over 100 points just from one medical on
That's
TransUnion.
right.
And that's the one that he wants higher is the TransUnion. And bam, I press a button and within 3 seconds it comes back and it's gone. Chad pulled a new report and bam, there's the new score. So it's definitely a nice little tool for the mortgage people and everybody. If you do see those medicals on TransUnion, I can zap them instantly.
It's almost like a reflex for us now. We see TransUnion, we see something derogatory that's smaller but recent and really pulling the credit scores down. We just send the clients right to Todd, and within several weeks, we have them back and out looking for homes with a qualified pre-approval. So it is one of our secret weapons, something you guys all have access to working with us. Todd and I have a long-term relationships and a lot of clients sent to him. So we have full trust in him, but we know the things that he can do well and that can have immediate impact or might be a little bit longer term. So that is true with TransUnion. He is a wizard with TransUnion for sure. Anything to add on just the amount owed on revolving debts and anything else that, like, what are revolving debts? What are those accounts?
So revolving would be a credit card. A car loan is going to be an installment. A mortgage loan is basically an installment where, again, a car loan, a student loan, those are going to be, you know that your payment is $400 every month. A credit card or revolving is going to fluctuate and it could be a different amount that you're paying each time. And again, Chad is showing us here 30%. You want, again, 30% is is the goal. Try to keep flow. Another thing, that I do, Chad, since I have my app, I use through Merrill Lynch, and they have a Bank of America, that's part of Bank of America, so I use their credit card. But I go like I'm just sitting here, I'm like waiting for something or whatever. I go on my Bank of America app. I could do it once or twice a week and I pay it off, because it's easier to pay a little at a time than pay this giant amount at a time. So it's just, it's less painful, it's easier, and that way I know for sure that that this thing will get paid off. I be honest, because I do it so much, I don't even pay attention to my payment date because I have no clue, because I'm constantly paying it like at least once, if not twice a week.
Got
Just
it.
because I want to see, I've got kids using it, I got my wife, and I want to look at the charges to make sure that nothing is weird on there as well. Because it's like, who uses cash anymore? Like nobody.
Right.
My kids, I have a college student and a junior in high school. It's like, they don't use cash. Everything is credit card, and they've got the card on their phone, for Apple Pay and everything. So I really want to see what is going on.
So a hot topic right now is student loans, the Parent Plus loan, and that's the loan that defers interest, but it can report a higher balance than the original loan, which really crushes credit scores. And we've seen this from people deferring their student loans through COVID. Of course, it's payment relief, but that gets tacked onto the balance. And we've seen this just create havoc on credit scoring. Todd, if you just want to give a few tips on that and how you've seen things, student loans and the Parent Plus loan impact credit.
Yes, the student loans are a nightmare, absolute nightmare, because I've seen so many problems with them. With the deferment. And then I always tell people, if you're going to defer these loans, you better darn well put in your calendar, paint on your wall or whatever, that this payment starts December 1st, 2022. Because I get so many times, oh, I didn't know that it was, I had to that the deferment went off. And I haven't been down that stage yet. And I luckily my daughter got enough scholarship money that I'm not taking student loans out. So I'm just paying the difference, which is great. So I don't have personal experience dealing with student loans. I don't want to, because I know from seeing on my clients, it's a nightmare. And some of these people, say if they're doctors or whatever, I don't know how these loans ever get paid back. I mean, hundreds and hundreds of thousands of dollars. The payments are so small. It's like almost impossible. Like, how is this thing going to get paid off?
Yeah.
So I would say the student loan business is a horrible business. Private banks used to be into it. They used to do student loans. You don't see any private banks doing it anymore. One thing too about student loans now, they used to be dischargeable in a bankruptcy. Now they're not. So they've really got people, because people would take all these student loans and then go file bankruptcy. But now, if you have a student loan and you're not paying it and you defaulted on it, if you have any kind of refund, they're grabbing it. And it definitely, when you're making, late payments or go bad on it, it's gonna affect your FICO score big time.
That's right, that's right. So Robin asked, after they pay,
Yeah.
pay these things down, how long before a repo will show the impact of, the event that we
Yeah.
fixed or the account that you got off or the paid down balance? How long before it actually hits their credit score? Great question, Robin.
So once you pay something off, I always tell people 30 to 60 days before the credit bureaus update the bureaus. Now, if we get something deleted and I see it's been deleted, Chad would pull the report and it's deleted. So it's gone. But when you do pay stuff off, that's why I always say that somebody with mortgages and they're trying to get a mortgage, definitely 60 days or so before you start really doing the process, make sure that your balances are in check and don't go out and run them up. And I see this too, where I've helped people, we clean up their score as high and then Chad calls me, the guy went out and bought a car, got a loan on it and bam, the score drops. Because when you open new credit, your scores will drop. So they will come
Say
back
it again.
up. So when you open new credit, we see scores drop. And it takes, several months for it to pop back up. But I don't want to see somebody, and as a realtor and everything, you got to coach these people too. Like, hey, we're going through this process. Don't go out and open new credit cards. Don't make any crazy purchases, a car. Don't take any loans. Let's just get this mortgage. Once you get your mortgage, do whatever you want.
Right.
But during the process, you cannot have your credit pulled and get new stuff put on it.
Yeah, anyone that wants our 10 commandments and take it, put your branding on it, anything I send you is always yours to take, copy, steal. Just know I've done it to somebody else that gave it to me. Not too many original ideas in my brain. I've just seen successful people put great materials out and I ask them if I can use it and put it to myself. But I have what's called the 10 commandments of getting a loan. It says, thou shalt not open a new credit card, thou shalt not quit their job without talking to Chad. So take that, enter in your email, and I'll make sure Carrie sends that out to you. Serena had a great question, Todd, on automatic payments still being on time if the payments are due on the weekend. And remember, Serena, the credit companies or the credit repositories only report you if you're 30 days late. So you always have a grace period with credit scoring until that payment comes up 30 days late. Any feedback on that, Todd?
Well, like I tell people, every company's different. Chase is going to have different rules than Citibank or Bank of America. So the best thing, obviously, I can't answer that 100%, but I'm sure they take some consideration in, like, if your payment is due on Memorial Day and the banks are closed, they know, and it's going to be accepted. But like Chad said, like certain banks do have grace periods. So you might get hit with a late payment, but I think in this situation on the holidays and the weekends, I think it would be paid as well. So I don't think that's really a problem. People have not brought that up to me.
Cool. Talk a little bit about length of credit and what you see with how long people have accounts open and how that's important on their credit scoring.
Again, very, very important. That's why when I go through credit reports and we review, not only do we review the negative information with them, we go over their positive credit too. And that's when I see like a J. Crew credit card or something, even though I don't like those cards. And he's like, oh, I don't use that. Well, you haven't, it looks like you haven't used it in 3-4 years. They're going to close it on you. You've had this thing open since 2000. This is a really good piece of history for you. Just go buy something, whatever, something cheap, pay it off. And definitely that will keep that card open, because if they don't see any action on the credit card, they will close it on you. So it's real important to keep those open. Terrorizing will not generate. Okay.
That was a great tip Todd gave me years back is, hey, don't close this credit card. You've had it open since 1998. He said, put a gym membership on it and set it up on an automatic payment with your gym membership so they don't close that account. If they close this account on you, your credit score is going to go down from 60 to 80 points and it's going to highly impact your interest rate. So that was really great advice Todd gave me years ago.
You know something?
Go ahead.
Something you brought up, which is you talk about gym membership. So this is what happened to me, and this is a good little tool for everybody to do as well. I mean, how many people have had, again, I got Bank of America. I happen to be at Home Depot or Target. Nothing happened to my credit card, but I guess, you know, what happens is, and I haven't had it in a while, but somebody that day or something, their credit card, something happened there at the Home Depot I was at. So all of a sudden, and it happened like 2 or 3 times in 1 year. I get a notification because something was compromised, not on my account, but somebody else's. They closed my account and give me a new one. So I'm like, now all of a sudden, my wife called me one day. She goes, our home phones aren't working. I'm like, what do you mean they're not working? I was set up on automatic payment. Well, I forgot to switch it to the new credit card because, you know, a little bit out of sight, out of mind. So what I did was, since I go to Starbucks, Citibank, Chase has a Starbucks credit card. And they had an unbelievable promotion. I literally got like, and I drink these $4 or $5 drinks. I literally got like 40 free drinks from it. Plus you get double points. So all my reoccurring purchases, my cable, my alarm system, whatever it might be, I put on that credit card. I do not use that credit card for anything else. I've never taken it out of my house. So the bill, so there's no way that this thing's going to get compromised. It's not going to a store where there's been a problem and then all of a sudden they shut me down. So I've had that for the last probably 6-7 years. I've never had a problem with it. So plus I'm getting, now in that situation, I am gaining those Starbucks points. And every time I buy them, they're like, I can't believe how many points you have because we have so much, you know, reoccurring stuff on that credit card. So that's something to do as well if people have had problems. I
think that's a great tactic. I see people credit cards serve for benefits. Find a great card, stick with it. Make sure it gets good cash back or really good points on something that you like that you'll use. You know, I have a Chase Sapphire card that I absolutely love. Gives me a ton of cash back. That's how I use the card. All of our expenses go on it. When you open these new accounts, Todd, you said you typically see the credit scores go down. Give us a ballpark of about how much that will be.
I've seen anywhere from 10 to 30 points.
We've seen the same. Got it. So that's really important before you take a client out to shop for a home. Go over those those 10 commandments that we'll send you. Make sure they don't do anything before you get them in front of us. Before they go buy the home, tell them you got to stop right now, read these, live by them. You can do anything you want after you close on the home, but until then, you need to be tight on your finances. And opening a new account, we have seen it get mortgages decline. We've seen it increase individuals or decrease individuals' credit scores, which increases their interest rate because we do a soft pull as a mortgage lender. Right before closing, we look for inquiries. And if there are inquiries that we think they open new credit, we do a hard pull. And if we have to do a hard pull, we're susceptible to those new credit scores. So it's super important before they go out looking, I would say 90 days through closing that you just have them freeze. They can use their existing credit, do not have them open new credit. Anything else to add there?
No, that's really good. There's something else I was going to talk about, but no, go ahead. No, we'll think of it in a second.
Cool. Types of credit in use. What do you typically see of types of credit in use? We got installment loans, right? We have
Revolving
debt. Anything else to add there?
That's really it. You know, revolving and installment and mortgage is, they call it mortgage, but it's basically it's an installment as well. So having some mix is good to have, but there's some people that just don't want to, you know, I don't want to have a car payment. But I've seen people like my brother had like 2 or 3 credit cards and his score was like 840, no car loans, no mortgage. and he still had a monster high score.
Cool. So we do, and we touched on this a bit, but we'll dive a little deeper to end. We do credit rescoring, right? We do this as a company. When we see Todd have an event where he's able to get something deleted, he's able to get a late payment. But we also do it through errors that the client feels. So it's super important to work with a mortgage lender that goes through the client's credit and checks with them for accuracy, because those people reporting aren't always accurate. And if we can prove that, we have a service that goes through the credit repositories, and the client and us pay a fee, but we can get their credit rescored. So it is available through most bureaus. It's a little misunderstood. Rescoring cannot change a bad scoring history. And there's a universal change form that we submit. Some of the things that we see are needed to rescore: errors in payment history, incorrect account balances, accounts just discharged through a bankruptcy that show as charge off, meaning they're not reported being through the bankruptcy, and they should have. We see that a lot. Accounts that show heavy use that have available credit, and missing accounts containing on-time payment history. Anything else there that you've seen, Todd?
Well, the biggest thing that I've seen the rapid rescores are for, when we say incorrect account balance, not that it's incorrect, it's again, the balances were high, and I'll tell the people, listen, pay this off, make sure you get the receipt or whatever it is from the bank, then you give it to Chad and he can do a rapid rescore instead of waiting the 30 to 60 days for the scores to reflect. Chad can do it much quicker, and this, which is an excellent service. Now, again, if a guy has a charge off and it says, Chad, I don't want this on my report, do a rapid rescore and get it removed, he can't do that because it's a charge off. So this is stuff where, again, or I've had situations where the collection agency says, okay, this has been paid, we're going to remove it from the credit report, but say the closing is, in a week from now. And then Chad could take that and get that done a lot quicker than waiting for the credit bureaus to do it.
That's right.
And I was going
Go ahead.
I'm
Todd.
sorry.
No, I just wanted to end on this. Some tips for raising credit scores and improving their credit profile. First of all, don't let your client be the judge of how good or how poor their credit is. Let me do it. Let Todd do it. Let the experts handle it. I see too many times where something insignificant has happened to their credit scoring, and the client thinks it's a big event, and it hasn't impacted their credit scores that much, and they just haven't checked. I've seen people think that buying a home is out of reach because they have a 620 credit score, but that's a perfect score to get an FHA loan for, and we can make that happen. And I think this is the market to do this. But tell your clients to pay their bills on time, get current on all their payments, prepare a long-term strategy, keep balances under 30% on revolving debt, like Todd talked about, pay off debts, don't move them around, right? Credit card surfing doesn't do anything positively for your credit score. In fact, it impacts it negatively. Don't close credit cards as a short-term strategy. It could actually do the opposite. I'll see a lot of people pay off their credit cards and be so grateful that they paid it off, and then they close the credit account. I'm like, oh my God, all that work, and you just ruined your credit by making that move. Don't open a lot of new accounts to see if they're going to get a rapid bump up in their credit score. It's typically going to do the opposite. Do rate shopping with a focused period of time. I think that's 60 days. Determine the lender that you're going to work with from the beginning. The truth is we all have access to the same money. Most of us offer about the same thing. It's who you feel comfortable working with. Check and manage your credit history. It's something you hear Todd said he checks it 1 to 2 times a week. You should check it monthly. Take the credit increase if offered, meaning if the revolving debt says, hey, we'll bump you up another 10,000, that just gives you an opportunity to have your revolving balances under 30%, which can increase your credit score positively. Anything you want to end on, Todd?
Yeah, I definitely, for all the realtors out there, the 10 commandments that you're going to send them is an excellent piece that you should give to your clients. And first thing that I think the realtors should do is, okay, what kind of home would you like, Mr. Cogan, whatever, this, that. But hey, you have to talk to Chad first, because we have to get you pre-approved, because so many times people say, well, I want to buy this house for $700,000. An experienced realtor, that's a big jug of water.
Every day, baby, 1 gallon a day.
An experienced realtor is going to know, hey, I got to send this person to Chad first, because you go out and show these people $700,000 homes. Chad comes back and says, no, they can only go up to 500. Now you show them homes for 700. Now you get to show them homes for 500, which still might be nice homes, but obviously they're going to be different.
Right.
So, now you've wasted your time showing them a more expensive home that they can't afford and they like more. And now you're showing them something that's a little bit downgraded. So first thing first that a realtor should do is bring your client to Chad, make that introduction. Chad's going to look at their credit, make sure that it's good. If it's not, they'll send it to us. We'll work on it. And hopefully we can get them cleaned up so they can get approved, and then you can sell them that house.
Todd, what's the best way for anyone on today to refer a client to you to handle their credit repair or to do an initial consultation on their credit score?
I'm going to put on here right now, since I'm typing quick. This is my direct number at my office. And I'll send you, what do you call it?
Put your email on there too.
Okay, yes, that's what I was thinking. Email or call is fine. The best thing to do, though, is if you have a client that has credit issues, tell them, hey, I work with Todd at Nationwide Credit Clearing. Is it okay if I give them your contact info? 99% of the time, they're going to say yes. Because the problem is, like anything else, if they say, oh, yeah, sure, give me his number. Then you call me 2 weeks from now, and Jerry says, hey, Todd, did Scott Cogan reach out to you? No, I have no records of this. Oh, I told the guy, I gave him your number 2 weeks ago. No. So now we've, not only has he called me, but we wasted 2 weeks to, get started. So the
Right.
more time I have, the better. And plus, I get people, well, I'm looking to buy in March of 23. So I'm going to wait. No, don't wait. Let's start now. I would rather have you finish sooner. And then, you could sit with good credit versus having, sorry about my phones. That's just a good thing. I'd rather have you be done versus now we're scrambling. And I get that all the time. I'll get, mortgage brokers will call me, hey, this really good referral source sent me this person. And I pull their credit. It's just a train wreck. And they want to close in 30 days. I'm like, have I pulled miracles? Yes, but it's tough and everybody's under pressure. So the sooner you can get them to us and we can evaluate it, Chad and myself, that's the best thing to do.
That's right. I think 6 months before a client looks at a home is their best time to check on their credit. That gives Todd and I the opportunity to consult them to maximize their credit score, which will minimize their interest rate. And right now, credit scoring, what are called loan level pricing adjusters, are some of the highest I've ever seen. So with interest rates being high and loan level pricing adjusters being high, it can kick your client out of qualification if they're not maximizing their credit score. That once again will minimize their interest rate. So there's no time that's too early to get them in front of me, to get them in front of the loan officer that invited you here today, to impact your clients positively, to be a professional that stands out against the competition. And no, we're always here to serve any of your clients. We take approach of a long path if we need to. We will walk a client down a 4-year road if needed to get them into a new home. We had someone close with us about 2 months ago that it had literally been 5 years since my initial talk with them. They did everything Todd and I told them to. They were in the low 500s. They're now at a 760. They saved up to put 20% down. They bought the home of their dreams, and they did that because we held their hand all the way through the process. And those are the best clients. Those are the clients that will refer you. Those are the clients that will use you for life. those are the clients that are great relationships for long-term success. So we're always here to support that. We will let you know through some videos and this PowerPoint. There's a little more we didn't get to of how credit events impact mortgages. I'll send you that information. I always want to keep these at an hour, and we are over. So just give it up for my man, Todd Stern.
Thank you so much.
For pouring into us today, Todd. Amazing information, great life hacks. Guys, use this to create stickiness with your clients. Send some of these nuggets out on social media. Send some of them out on videos to your past client. These are the things people want to hear. These are the value adds that we can use to create stickiness with our past clients and keep them referring us and coming back to us. So thank you for coming here today.
And anybody has any questions, give me a call.
Thanks, Todd.
Thank you.